Guys, do me a favor, sit back, relax, go grab yourself a beverage, and please give me 10 minutes of your time. Tomorrow is a very important day. Tomorrow we're going to get the CPI data, which stands for the Consumer Price Index. Last month, for the month of June, the data came in at a near 4-decade high of 9.1%. Because it's so high, the Federal Reserve needs to raise interest rates to reduce demand so that this can slow down and cool off the economy. And when you slow down and cool off the economy, you have something called deflation. It removes inflation. Now, in order to do this, you raise the interest rates by the Federal Open Market Committee, the Federal Reserve, that meets 8 times a year. So they're not meeting this month, it's a leap month. They're going to be meeting in September. There is a 2/3 probability that they will be raising by 75 basis points and a 1/3 probability that they will be raising by 50 basis points. Currently, the interest rate is 2.5%. So the perceived notion is that in September, the interest rate is going to be around 3 to 3.25%. In my personal opinion, I think they're going to be raising by 75 basis points no matter what, and it's not because this is what people are thinking. I said this at the last CPI report. I think they for sure should be raising by 75 basis points, and then somewhere in the second half of 2023, just keep raising and then start lowering, which is going to ramp up the economy. You see, the Federal Reserve, they can only do one of two things. They can only control demand. They cannot control supply. Long story short, as they raise interest rates, it gets harder to borrow money. And as it's harder to borrow money, it gets more expensive to borrow money. As it gets more expensive to borrow money, your bottom line as a company goes down, which means the multiples of your share price also gets reduced, which means the valuation of your company gets reduced. Be it artificially or organic, that's what happens. If inflation is not going down tomorrow, the expectations is the Federal Reserve is going to be raising by 75 basis points and possibly more, and 75 and 75 and 75. You see, I think that they're going to bring up the interest rate all the way to around 4.5% to 5.5% over the next few meetings, and then they're going to start lowering it down. That's my own personal view. But what if they start raising it even higher? 7%, 8%, 9%, which I don't think is going to happen. However, they need to control inflation because inflation is like a runaway train with no conductor. That's why it's very important to see what's going to happen tomorrow. I've been tracking gas prices for quite a while. And for the last 60 days or so, gas prices have steadily been going down. The national average of gas prices as well as diesel gas prices. You see, gas, the actual gas that you put into your car has to do a lot with inflation. Not only directly, but also indirectly. As you get goods off the pier, you need to deliver it. As you're delivering those goods within your warehouses, as you're shipping on an airplane, as it's on the actual boat, and for regular people like Amazon drivers, for example, and Walmart drivers, for example, and Uber drivers, so on and so forth, everybody relies on gas. June 9th, the price of crude oil was $123, $124. Currently, the price of crude oil is $90 a barrel, which is just about the same price as it was 6 months ago. So in my personal opinion, gas prices and crude oil prices peaked somewhere in the first third of June. Now, everything's a lagging indicator and it takes time. Just because crude oil goes down does not mean gas prices are going to go down overnight. It takes time. Around 2 months ago when I started tracking gas prices, the national average was $5.01. Today, the national average is $4. $4 and like 0.0 something cents. The price of gasoline went down around 20% over the last 2 months. That is significant and most certainly will affect CPI, Consumer Price Index, the inflation. Now, if inflation does not go down tomorrow, kiss the markets goodbye. Stock market, crypto market, and real estate market. Everything's just going to go. Why? it would pretty much be 100% that they're going to be raising 75 basis points and a possibility of 1 basis points. And they're going to be more aggressive than everybody thought. At this point, we're literally on the teeter-totter where we believe that the worst of everything is behind us. If tomorrow inflation starts going down, and then the next inflation report in September that we get for August, also inflation starts going down, then people are going to breathe easy that we are literally on the second half and in the recovery phase of what the heck is going on right now. Another thing that doesn't help us is the jobs market. One of the reasons why the Federal Reserve is so aggressive with their rate hikes, and I'm not saying they're right or wrong, I'm just saying that this is considered aggressive, 75 basis points, especially 2 in a row, is because we have such a strong jobs market. As we have a strong jobs market, we can raise the interest rates because the economy can absorb it. If the jobs market would have went down and the CPI data was going down, then the markets would perceive this as positive and everything would go up. We have a very interesting situation right now where we actually have a recession, and don't let anybody lie to you and say it's not a recession. We have 2 negative quarters of GDP. All that other bullshit, don't listen to them. They're trying to brainwash you. We are most certainly in a recession right now. Normally in a recession, we would not have a strong job market. And this makes this a very unique case that we have right now. I'm going to be filming the CPI data tomorrow on this channel. It comes out at 8:30 Eastern Time. At 7:30 Eastern Time, I will be going live on this channel to do a Q&A, answer any questions, and we could talk about it. So the perceived numbers tomorrow was 8.7%. Now, over the last couple of CPI reports, over the last year, the expectations that we had, the perceived expectations, aren't really on par with the reality of the numbers that we get. So the expectation of 8.7, I would be very shocked if we actually got 8.7. But who knows? Maybe it goes into a positive direction. And when I say positive, I mean negative, and it goes down the inflation. What's good for the economy is not necessarily good for the stock market or the crypto market or the real estate market, and vice versa. We actually want something bad for the economy. We actually want less jobs. We actually want the Federal Reserve to lower interest rates. What we care about is the bottom line of our corporations. And the bottom line of our corporations are most certainly driven by the price of interest rates. I have a chart that I made in the last FOMC meeting. I'm going to share it with you. This is what I believe the Federal Reserve is going to do with the interest rates. And remember, the interest rates are very much correlated with what's going to be happening with the CPI data. As the CPI data is going to go down, the inflation is going to go down, the Federal Reserve is going to tend not to be so aggressive, and they're going to start loosening up their policy. Right now, we're trying to destroy the economy to slow it down. And when it's literally destroyed at its bottom dollar, like the bottom of the barrel, then we're going to ramp up the economy again. You ramp up the economy by lowering the interest rate of the federal funds rate. If you lower the federal funds rate, all of a sudden, all these big mega corporations are going to start borrowing again. And all the people that were fired, and you do want people fired, I'm sorry, I'm not a douche, I'm just being honest. The Federal Reserve themselves said that they want people fired. Those same people that were fired will be hired back by all of these businesses that are now borrowing money and ramping up investing into building up their brand, marketing, development, production, distribution, goods, services, so on and so forth. And that is the life cycle of our economy. The economy ramps up, everything is good. Interest rates are down. As the economy ramps up too much, you start upping the interest rates, because as the economy is ramped up, inflation is also going up because more and more people are spending money. Easy come, easy go. Easy money, cheap money is easy money to let go. As the economy starts ramping up, interest rates starts going up and the economy starts going down. And then you have this situation where interest rates keep going up, 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 up. Economy goes down, 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 down. When the economy goes down, 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 so does the jobs and people working, which is okay. It's a natural life cycle. You can't have it both ways. This is just the way it works. And as the economy goes here, 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 and interest rates go here, 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 then you're like, okay, let's start lowering interest rates to ramp up the economy. And as the economy gets ramped up, people start working, people start spending, and companies start producing, which is then going to increase the bottom line of the mega corporations that we're investing into and cryptocurrency that now acts as a tech asset. And as we lower interest rates, this is going to 100% affect real estate because then the mortgage prices are going to start coming down and people will start buying more homes. Right now we have 2.25 to 2.5%. I believe in September they're going to be raising by 75 basis points no matter what, and I think they should. No matter what happens tomorrow, they should be raising by 75 basis points. Just rip the Band-Aid off and make it happen, Captain. Which brings us to 3 to 3.25. In November, we have another meeting. In November, I think they're going to be raising by 50 to 75 basis points. Obviously, if inflation is going down right now and next month, that 50 to 75 is probably going to be more like 50 and not 75, which brings us to right around that 3.5 to 4% inflation. Interest rates. In December, I think we're going to get a 50 basis points, which brings us to right around 4 to 4.5%. And then in January, I think that the interest rates is going to be lowered to 25 basis points or maybe nothing. And same thing in March. And after that, in the second half of 2023, I think they're going to start being neutral and start lowering the interest rate, which is then going to bring back our economy for investing. This is my own personal opinion. So I think they're going to raise the interest rate to around 4.5 to 5%, maybe 4.25 to 5%, and then bring it down. If you know this is going to happen and you know you're in a recession right now, the best time to plan for this is right around this point right now. If the inflation report comes lower tomorrow, 8.7 or even lower, the stock market should rally. However, not only will the stock market rally, everything that I'm saying right now is probably going to happen. However, if inflation comes in higher than 9.1%, kiss everything goodbye. Everything. Everything is going to go down. All rallies are going to go down. Earnings are down already, and we have no idea what's about to happen. Like, I have an idea. Everyone's going to get shellacked. Just look at the earnings. Coin just came out, terrible. NVIDIA lowered its guidance. AMD lowered its guidance. Palantir lowered its guidance. Like, everybody is absolutely getting shellacked. It's going to get even worse. However, inflation comes down. Sentiment is going to be, Federal Reserve is only going to be aggressive for a little bit longer, and eventually the market's going to come back. Wall Street very much invests 6 months in advance, a year in advance, not much longer than that. So they're going to be doing the same thing that I'm trying to do right now and preemptively predict what's going to be happening in the market based on current conditions that try to back up through data and knowledge your thesis and hypothesis of what will conspire in the future with the market. Guys, thank you so much. I think this was a 10-minute video. If it took a little bit longer, I greatly apologize to that. But this is an extremely, extremely important video. And I hope to see you tomorrow morning at 7:30 on this channel. It will be streaming on all 3 of my channels because this is very, very important. If you have questions, let me know. I do have 3 channels. The links are down below. And I have my Patreon, which we have a live group with live video chats that you guys can ask questions. If you guys want to join that and support the channel, I promise you, you do get some value out of my Patreon. I'm not just trying to rob you for some money. With that said, the Berg is out.